Welcome to today's quantitative strategy and behavioral finance briefing. Today, we are focusing on the South Korean equities market, which is currently experiencing an extreme local decoupling and elevated systemic risk. We are currently observing a severe structural dislocation in the market regime, driven by both microdynamics and sentiment. On the macro front, the U.S.-Iran peace deal has triggered an aggressive reallocation of capital into Middle East reconstruction and energy infrastructure. Simultaneously, an unprecedented liquidity vacuum created by SpaceX's recent acquisition has drained global tech liquidity, severely punishing correlated technology sectors. Let us examine the specific information cascade paths. The diplomatic peace deal acts as a trigger, rapidly depressing oil prices and instantly redirecting capital towards engineering, procurement, and construction, as well as power infrastructure equities. Concurrently, a massive liquidity vacuum driven by aggressive retail options trading in U.S. space tech has drained capital from the AI and semiconductor value chains. This is further compounded by a local capitulation, where unfounded rumors regarding shareholder returns at top Korean chipmakers have exacerbated retail panic selling, leading to a complete decoupling of local valuations. Looking at our volatility metrics, we observe a historic divergence. While the U.S. VIX remains relatively stable at 16.41, the local KSV Kospi has spiked to a catastrophic 79.80. This unprecedented decoupling indicates that the current sell-off in Korean equities is not driven by a fundamental collapse in AI valuations, but rather a systemic retail capitulation and a pure sentiment breakdown characterized by extreme herding. Our behavioral phase classification reveals two distinct dynamics. The Korean semiconductor sector is deep in phase 2, characterized by extreme shock and retail herding driven entirely by fear, uncertainty, and doubt. Rational valuation models are temporarily suspended as retail investors liquidate local chipmakers. Conversely, the EPC and infrastructure sectors are in phase 1 transitioning to phase 2, as smart money front-runs the peace narrative, pulling in aggressive capital flows and transitioning into fear of missing out. Moving to our quantitative forecasts, we have applied severe T-1 error penalties to our 24-hour Bayesian scenario models. Because we previously underestimated the intensity of the local rotation, our probabilities have been recalibrated using continuous posterior adjustments to reflect the extreme velocity of the current market. Based on these rigorous adjustments, this slide presents the updated Bayesian probabilities for the Kospi index. Given the extreme localized panic, our base and bear case probabilities have been heavily weighted to account for the ongoing liquidity drain and retail capitulation. We remain overweight on EPC and power infrastructure due to immediate capital inflows from the geopolitical peace dividend and vast reconstruction pipelines. We have downgraded advanced AI semiconductors to neutral. While their fundamentals remain intact, extreme local fear mandates strict avoidance. We remain underweight on legacy memory and refining, as falling oil prices and liquidity rotations create significant headwinds. For our tactical setup, we are issuing an absolute ban on buying the dip. With the KSV OPSI nearing 80, the market is in a state of systemic panic, and it is imperative not to catch falling knives in the Korean semiconductor space. For our EPC focus, names like Samsung A&E remain prime beneficiaries, but we advise accumulating only on significant intraday pullbacks and avoiding gap-ups. For Samsung Electronics, we recommend strict monitoring until foreign institutional buying stabilizes. In conclusion, the current data dictates an extreme risk-off mandate. We are raising our recommended cash position to over 80%. Capital preservation is paramount until the systemic panic subsides and the local volatility index normalizes. Thank you for your attention.